4.7 million homeowners cannot afford their mortgage payment right now. Why does that matter? Well, it's 1.5 million more than when we had the financial crisis of 2009. Welcome back to Intentional Wealth. My name is Sylvan J. Rahman. In today's video, we're going to talk about what's currently going on with the housing market. Are we going to see a rise in foreclosures in the near future? And is this the right time to invest? Before we get into all that, go ahead and subscribe to the channel and click that bell icon so you're notified every time we release new content. So I did plan to shoot this video outside, but we are in Michigan. And they have a saying out here that basically says that if you don't like the weather, go ahead and wait 4 hours because it's going to change on you. And it was all nice and sunny. It changed on me and started to rain. So we're going to go ahead and try and push through this video and get it out to you. In order to understand what's going on with the housing market right now, we have to rewind back a few months. First, we got reports of all these little hotspots of the coronavirus outbreak happening, and that caused people to panic, which caused the stock market to take a huge loss. And don't quote me on these numbers, but we're talking about somewhere in the range of 30% loss in a matter of a week. Well, that went ahead and forced the Federal Reserve Bank to go ahead and lower interest rates in order to stimulate the economy. Now, how interest rates stimulates the economy is a whole nother video that we won't get into today. But the basic overview is that interest is the cost to borrow money. And when the cost to borrow money is cheap, people are going to go ahead and borrow money and buy things that they want to buy, thus stimulating the economy. Well, one of the things that people want to buy are homes or property and cars and houses. But today we're talking about homes. Even before all of this stuff with the coronavirus and the interest rates being lowered, we had a low inventory of homes on the market for sale. But now you have even more buyers out there wanting to buy a house. And yes, fortunately, there are people out there that still have money to buy even with everything going on. So now you have less homes on the market or low inventory, and you have many buyers out there trying to buy. And what is happening is that buyers are outbidding each other and actually paying more than what the asking price is. Now, the asking price and the buying price of a home is irrelevant to what the house is actually worth. In both cases, the asking price and the price that you pay for the home can be less or more than the value of the home. In regards to sellers, if you are a seller or are thinking about selling your home, this might actually be a good time to sell your home because you have a house and you have lots of buyers for that house. Let them fight and outbid each other for your house. But of course, you want to go ahead and talk to a local real estate agent or broker to give you local information on what's going on in your local market with your home. Now, if you are a buyer, this is also a great time to buy because the cost to borrow money is so cheap. So cheap! I want to buy a home, but there is a problem. What's going to happen in the future? And that's what we need to talk about. Because if you overpay for a home right now and prices start to go down, are you going to be underwater or are you going to be okay and still have equity? And if you end up being underwater, does that mean you might get foreclosed on? With 4.7 million people not being able to afford their mortgage payments right now, what do you think is going to happen in the foreclosure market? Do you think we're going to see a big rise in foreclosures like that of 2009? Comment down below and let me know what you think. Now that we've talked about what's currently happening in the market, Are we going to see a lot of foreclosures? And if you buy a house right now and housing prices drop in the future, in the next few months, in the next year, couple of years, whatever it is, are you going to be foreclosed on? No, it doesn't mean you're going to be foreclosed on. There are two things that need to happen in order for you to be foreclosed on. First, let's get through a couple of data points. In 2009, 24% of homeowners were underwater or in a negative equity position, meaning that they owed the bank more than what the house was actually worth. So in case they couldn't afford their mortgage payment, and in case they wanted to sell, they couldn't sell and walk away scot-free. They had to come up with a lot of money to the closing table so that they could get out of their house. The problem is, if you don't have money to pay for your mortgage, you probably don't have money to bring to the closing table. And that is what has happened in 2009. You also have to consider the type of loans that were out there and the whole situation that was going on. You had these ninja loans and you had these adjustable rate mortgage loans. Now, those adjustable rate mortgage loans actually helped people in the beginning with a lower mortgage payment, but once the rates adjusted, most homeowners couldn't either one, refinance to a lower payment, or they couldn't afford the new payment once the mortgage readjusted. Is that what we're going to see in 2019? No, because we don't have those type of loans. But another data point to consider is that in 2019, only 2% compared to the 24% in 2009 are underwater or in a negative equity position, which means that 98% of people actually have equity in their house, and that is a good place to be in. Because if you can't afford your mortgage payment, then sell your house. That's obviously up to you, but that is what I would do. I would sell my house and get money to walk away because I have positive equity. With Congress pushing for all of these mortgage forbearance stuff and banks going on with the mortgage forbearance, and actually the stimulus packages being talked about and new stimulus packages that may be coming online, you have to consider that these stimulus packages might actually help people keep their homes by helping people to afford their mortgage payments. Now, there is talk about one stimulus package where it's another round of $1,200, and there's another stimulus package that is being talked about that is a $2,000 payment. And the great thing about that one is you get $2,000, your spouse gets $2,000, your first kid gets $2,000, your second kid gets $2,000, and your third. That's like $10,000 a month if you got a spouse and 3 kids. Yo, babe, we gotta have some children. 3 of them, like ASAP. So in order for a foreclosure to happen, like I said, that there are 2 things that have to happen. 1, you have to have negative equity. And 2, you can't afford your mortgage payment right now. So 4.7 million people can't afford their mortgage payment right now. That doesn't mean that 4.7 million people are going to get foreclosed on, considering that only 2% of homeowners are in negative equity. If you can't afford your mortgage payment, like I said before, you just go ahead and sell your home and hopefully walk away with some cash in your pocket. Now, the other side to that is, well, what if I have negative equity? Well, if you have negative equity, but you can still afford your mortgage payment, then you're not going to get foreclosed on. You just keep making your mortgage payments and hopefully build yourself out of that negative equity situation that you got going on. Now that we've talked about what is happening with the current market and how foreclosures play into this whole situation, let me know what you think. Do you think housing market prices are going to fall? Are they going to rise? Are we going to see a rise in foreclosures? Let me know. Now, the question on everybody's mind, and actually my favorite subject, talking about investments and when is a good time to invest, there is no better time to invest than right now, especially in real estate. I honestly don't believe that there is actually ever really a good time to invest or a bad time to invest. And let me clarify, I understand that there are certain industries that you do not invest in during certain economic cycles, depending on where we are within the economic cycle. Now, as far as real estate is concerned, there are always deals to be done, always money to be made. That's just how real estate works. Obviously, we want to buy when things are low and we want to sell when things are high, just like anything else. So I get all that. I understand all that. But as far as real estate is concerned, and in fact, most businesses, if you're buying a coffee shop or restaurant or any type of other businesses, one thing you have to do is look at the numbers, because sellers are going to lie to you about the numbers. So you have to look at the numbers, because the numbers are your friend. The numbers will tell you this is a good deal. No, this is a bad deal. So don't do it. The numbers are your friend. Now, another thing about buyers is that buyers get so emotional about a deal that they will actually fudge the numbers to make the deal look good to themselves because they just want to buy it. Oh, maybe there might be a 20% increase in income next month over last month. Well, no. It might not be like that. Be realistic with the numbers. And if the numbers don't look good for the investment, then don't buy or invest in the business. So, first, look at the numbers and make sure the numbers are correct, because the numbers are your friend. They will not lie. 2, figure out how much you're willing to risk. Meaning, how much money are you willing to put up for an investment? 3, go ahead and figure out what type of ROI you want for that investment. And ROI stands for return on investment. So, for instance, there are some deals where I will risk a lot of money for a higher rate of return. And there are some deals that I will go ahead and put in a lower amount of money and get a lower rate of return. Now, every single real estate deal is a little different for me, and I have done purchases. I have lent money on real estate deals to other investors. So let's say one transaction. In one type of real estate transaction, I want to double my money. That is just it. No matter how much I put into that particular deal type, I want to double my money. So if I put $15,000 in today, and in 3 to 6 months, the deal is done, it's all finished and ready to go, we've completed the deal, I need to see $30,000. That is just me. For you, it might be different. Now, when it comes to private lending, in the private lending area of lending on real estate deals to other investors, some investors, when they're starting out, might lend at 5%. Considering interest rates now, that's a good return on investment. Some will do it for 7%. Me, personally, I do not get out of bed for anything less than 10%. But that's just me. And that is only because I'm starting out right now, and it's not a lot of money that I'm lending out. If I were to lend out more money, I might lend it out at 15% or upwards of 18%. Now, you're probably thinking, wait a minute. Why would anybody come to you to borrow money when they can go to a bank and get it funded for much cheaper? Well, there are a variety of reasons why a bank might not fund another investor's investment. And so they come to someone like me and I go ahead and invest. Their reasoning for why they have to come to me doesn't really bother me. I do take that into consideration, but like I said, I always look at their deal and I look at the numbers. If it works, it works. If it doesn't, I walk away. I am not scared to walk away from a deal. I would rather lose 100 deals than to lose a massive amount of money on just one bad deal. So I'm picky about the investments I look at, And so far, luckily, knock on wood, I haven't lost any money. Now, will I lose money in the future? I probably will, but that is a risk I'm willing to take. And that is a fear that I just kind of work through every single day. So remember, look at the numbers. How much are you willing to invest in an investment? Money-wise, time-wise. You can even be a credit partner. It's all up to you. And what type of return on investment are you looking for? Those are the three things you got to figure out. And as far as, is this the best time to invest? Like I said, there is no better time than right now. If you like what you've seen here today, then go ahead and subscribe to the channel, like and share the video, and follow me on Facebook, Instagram, and Twitter. And also, do not forget to comment down below on anything you liked or didn't like. And maybe one of these days, I'll go ahead and show you a comment that made me laugh because somebody said I was lying, which I wasn't. We'll see you next week.
Scene 2, take 1.